All right. Hey there, everybody. Man, what a morning already. I do apologize. Man, software just broke down, wouldn't start. Kept clicking on it, couldn't get it going. Restarted a few times, didn't work. But anyway, man, Christopher Inks here with Texas West Capital coming at you live from a rainy, Bernie morning here just north of San Antonio, Texas. Good to have you all with me. It is, man, just about a quarter after 11 a.m. Central Standard Time here on Tuesday, the 23rd of August. 2022. So great to have you guys checking in here. Hopefully y'all are doing all right. Man, so we got a lot going on. Gosh, let me think here. What all do we have going on there? We've got, let me see here. We've got Biden tomorrow talking about the student loan debt relief stuff. So that should be, I guess, interesting to say the least, right? So we've got that coming in tomorrow. And so, the student loan pause is supposed to restart here coming up in just a day or two or something like that. I think maybe tomorrow. But, I don't know, man. I think it's crazy that they wouldn't extend it through December, get them through those midterm elections. They've got the very slight kind of lead there in Congress, and man, oh man, they don't want to lose that, especially with everything else going on. Everybody blames, as I said, blames the Democrats, blames Biden on, inflation, rising prices, all this kind of stuff that's going on. So I don't see a real reason why they wouldn't, but hey, who knows, right? But this also going to include the other relief stuff he was talking about. Remember, Biden came in promising $50,000 per student loan borrower to be, dismissed. And now we're looking at maybe 10,000, if that. So, again, it is what it is. Guys, politicians are going to continue to come. It doesn't matter where you are in the world. Politicians are going to continue to tell you what they think you want to hear so that you vote for them. And most of the time, they can't do it. It just is what it is. The sooner we recognize that, the better, right? What else we got going on? I think we've got the sixth consecutive month of existing home sales sliding. This has been the fastest drop since, I think, around 2005, which lasted for about 9 months and preceded that 2008 great financial crisis and housing bust and all that kind of thing that happened. So, we're going to see the same thing here. I don't know. Here, a little bit different. It seems like we've got a tighter market as far as what's available in terms of homes. But, again, less people really kind of following through. I saw something about more buyers backing out now than, it just keeps on increasing. They're backing out. Sellers are jumping up to accept, lower down payments and lower prices and willing to fix more before they sell it. A lot of stuff that you didn't see, earlier this year, coming into this year and whatnot, when things were rallying really hot there. So, again, nothing surprising. Same thing we kind of been looking at. We've got, let's see here. We've been talking about it. We had the huge jobs surprise to the upside, right? And then we saw after that we expected a pretty big pullback for CPI, but we got an even bigger surprise to the downside. Whereas before the CPI, you're thinking, man, Fed's looking at 75, probably maybe even 100 basis points, and now you're like, well, I don't know, probably 50. Maybe an outside chance of 75. And we'll continue to look at numbers as they're coming in. But, again, guys, I keep reminding you, that my view at the beginning of the year was that we'd see these interest rate hikes by the Fed strengthening through the end of Q3 to beginning of the Q4, and then we'd see them start pulling back. So, was the last one the last big one, or are we going to have one more coming up here into September and then pulling back? We'll see. I think we've probably got that going, though. What do we got? We've got Bitcoin kind of pushing up a little bit. We've got stocks. Stocks have pulled back quite a bit here the last couple of days. Nothing surprising there. Man, look at that. See, everything crashing on my computer now. Man, I don't know what my software did. God dog it. Anyway. So, good times there, right? What else do we got going on? We've got, man, the dollar. Maybe the dollar has topped. And if it did, it topped just shy of printing a new higher high. And, the euro dropped down for a new lower low. So often with these currencies, with these major currencies like this, you'll have this this non-confirmation. So the DXY not printing a new high so far is a non-confirmation of the new low on the euro. And usually that signals a reversal. It's the same way that I've talked to you guys before about indexes when we look at them. A big one is the Dow and the Dow transports, you know. So if the Dow transports pull down and the Dow kind of pushes up, you know, that non-confirmation usually means that the Dow is going to come down, right? It's going to reverse. It's at a reversal point. Same kind of idea here with currencies. So the big thing about that, why should you care? Because, you know, again, guys, if the DXY is coming down, it's because people are taking money out of the dollar, right? People take money out of the dollar when they're feeling more risky, when they're feeling more risk on, right? And so generally then money tends to find its way into stocks, into crypto, stuff like that. So, you know, I've talked at length, guys, about Bitcoin and how I believe that most of the selling is probably done. It doesn't mean we can't go down a little bit lower, but these calls for below 10,000, whatever, I don't think make as much sense as a bottom potentially being in or one really close by. You know, because we look at that whole flushing out with 3 Hours Capital there, you know, and Celsius and Voyager and all this. You know, we had capitulated prior to that, the market did, and then we had that. And that was kind of like, you know, you kind of look at it and go, well, I think pretty much generally anybody that was holding that was going to get out is probably out. And so, you know, again, you're looking at what we usually look at, you know, so then you get these bottoms that form, these accumulation ranges, and they take some time. And everybody's scared to get back in. They want to wait till, you know, material levels are taken, right? So maybe 30,000, something like that. The last time I saw, I think there's about about 1.4 billion in stable coins, so money on the sidelines, basically. And that represents like, was it 1.4 billion? Something like that. It represents like 1/3 of what's out there in crypto outside of Bitcoin and Ethereum. So basically what it is, there's a lot of money just kind of sitting there waiting to get in, but it's not going to jump right in, right? So it's going to wait. It's going to wait till some levels are taken out. And like I said, most of your retail are going to wait till we get toward the all-time highs again. They're not buying down here at the lows. They're not buying, you know, at 30,000. Most are going to wait till they get closer to 65, 70,000 before they jump in. So, you know, accumulation is usually done by the larger players, you know, just wringing out the rest of what they can from, you know, y'all's hands and then kind of letting it rally up. And you guys will be scared to get in. And so it just continues kind of pushing its way up. And then you kind of jump in there, you know, right before it breaks out to new all-time highs kind of idea. So, yeah. So anyway, let me see here. Who's here already? Hank's here. Data's here. Dancer Eddie, what's going on, guys? Devolution, Blaze. Jonas, what's up, man? Yeah, man, I'm sorry it took forever to get to that DM, man. It's been crazy here, guys. Speaking of crazy, you know, we've got all this stuff that I told you we're going to be launching here, right? We've got that Traders social media site. We've got that Traders TV network, which you'll be able to get on Apple TV, Roku. You'll be able to get it on your handhelds, you know, your iPhone and your whatever, you know, your Google phone or whatever. You'll be able to see it on the website. You'll be able to get it on Fire TV, all those places. So we've got those things we'll be releasing. We're doing Trader Sessions is another one, which is going to be just kind of talking about trader psychology and whatnot. So we've got all this stuff launching and whatnot. And then I get a call from Scott. I get a message from Scott, and he's like, "Hey, man, you want to come out to Vegas at the beginning of October there and teach something?" And I said, "Well, shoot, I'm kind of buying a house next month and moving. We can launch and all this." But yeah, so looks like I'm going to be over there from the 10th through the 13th, guys. The Web3X thing in Vegas. So, man, I'm going to teach something there on stage. And you know what? I think I'll probably do some meetups maybe while I'm there as well. So if you guys, I don't know if any of y'all are planning on being there, but if you are, just come say hi, right? That'll be a lot of fun. So, yeah, you know, we're going to be doing that. Man, I got so much other stuff going on. It's just crazy, guys. We got lots of stuff coming out, so just keep watching, all right? By the way, Elliott Wave International has a thing going on this week, and since I lost my browser, I don't have it here, but jump over to my Twitter page there, whatever you call that. Sometimes I sound so old when I talk about it. And check it out, man. You know, again, guys, it's more free stuff for you. I think it's like 5 trading lessons or something that they're doing. So check it out there. I've got that link on that. I do apologize I don't have it available in front of me at the moment, but you guys can jump over there and do that, right? Hank, it'll be October 10th through 13th during the Web3X conference is when it'll be. So, yeah. So lots of stuff going on. Hey, if you want to join us, you can do so at howtotradetowin.com. We'd love to have you there. Guys, we've still got our special going on, but this is going to be the last week I'm going to go ahead and turn it off at the end of the weekend. So if you want to get half off of your Tier 3 and 6 months of your choice of signals, crypto, FX, or stocks, jump on it, get it done. I think I'm going to do, I keep getting lots of people asking about this. So we sold a few lifetime memberships, and what these get you is they get you full Tier 3 forever. They get you full TV network forever when that launches, full social network when that launches, because these are going to be paid things, right? You're going to get all that, free trader sessions when that launches. So it's going to basically get you, pretty much everything we do for life for just that one cost. I think I'm going to do a few more since I keep getting people asking about it. I think I don't want to do too many. Let's go ahead and do 5 more. 5 more. We'll do 5 more. So you guys got to DM me to if you're interested in that. I'll get you set up on that. And then, man, I think it's probably gonna be it. I've never figured I'd ever do lifetime stuff, but you guys talked me into it prior, and so I'll do it one more time here, and that's what we'll go with. That okay? $5,500. What it is? All right. So there you go. Let me see here. Let me jump on over to the charts here, right? Let me see here. Who else is here already? Let me see. Chris Baker, good morning, sir. Good to see you. Name, Mr. Wilkes, what's going on, man? Is it true that September is traditionally a bad month to buy crypto? Every market has its seasonalities. Crypto's done a lot different, last year. The last few years have been a little bit different than what it's normally done. I don't know that I'd worry so much about that seasonality now. You can remember back to 2017. See, I don't know necessarily, because if you think 2017, right? September was that pullback low, and then we rallied like from 3,000 to 20,000 over the, prior to the end of the fourth quarter there, right? So throughout the fourth quarter, we rallied up huge, right? So, almost 7 times, almost 6 times, something like that. So I wouldn't say that it's necessarily a good time to buy or a bad time to buy or whatever. Let me see here. Hank says in 2020 is probably the best month to buy. So there you go. There's 2020 as well. So yeah, I don't know that I'd necessarily say that. We've seen it really run up through there, right? It'll be good to see me stream with Scott Melker again. I've got something I want to approach him with on that. So you may get your wish sooner rather than later. We'll see. He's a busy guy. Let me see here. At the win, Hank? Yeah, man. At the win. ARM, what's up, man? Good to see you. Let me see here. Who is this here? Poison, what's up? Let's see. I'm really cheap. Yeah, 5,500. Yeah. Again, it's just anybody that's been following me for any length of time, that I did. I mean, I've got to charge something because I spend a lot of hours doing this, and I have to charge something, right? But what I tend to do is I tend to make lots of exceptions and try to give opportunities where I can for, people that are serious about really wanting to learn and really wanting to get ahead and do their thing. And so, I continue to do that today. And so that's why, we get that there. So yeah, very inexpensive for everything it's going to be. Again, it's lifetime access to all those services and stuff that we've got going on. So a lot. Signals, lifetime service to all the 3 signals we've got going now. We plan to offer an options signal service as well. You'll get that. Yeah, so all that kind of stuff. All right, the real go-go. What's up, man? Wearing shorts today? Let me see here. All right, so here we go, guys. So here's what we have. So we've got this low here, right? Now, guys, listen, I know everybody's very bearish, and as I've said, we could possibly go down further, right? The truth is, so far, we've got this rally. We had a rally here that took us up about 41.5%, guys. And so many people just sitting out waiting for it to happen, right? So we've got this kind of this overlapping price action here. I've still got this as a 1-2, 1-2, all right? So for this, the second 1-2 here, the second wave, the second wave, I guess here, right? We've pulled back right here. It's 70.5. What is it right there? Not quite 70.5%, right? So very, very solid wave 2, if it is, okay? I'm going to show you guys a chart here, one that I posted out there on Twitter and everything about the weekly Bitcoin cycles. As far as the bearish RSI, I'll show you guys that here in a minute as well. But nonetheless, so we've got this pullback here, right? And we didn't quite dip into oversold here. So, maybe we could have one more coming down, here toward the S1 pivot, maybe at 19,800 kind of area. We did break down into oversold here, right? We do have capitulative volume here on this drop, right? But really, all we've done is just drop into this support here. So yeah, we could go further. But again, the idea that you short here with thinking that you're going to get here without considering that you may rally back up. For most people, what that ends up being is they hold on as price rallies because they keep thinking here. They don't consider what may be going on right here. And that's where you guys end up getting caught and you lose profits that you have. Don't be afraid to take profits, okay? Right now you can see that actually where we stopped right here, swing low, demand block there, resistance all over here. You see support level right here. You see that? It's a pretty significant area that we've dropped on. We're right at this high volume node. So we'll see what happens. But right now I've got that as a 1-2, 1-2, okay? Let me zoom in on that here. Kind of zoom in. Oh, there we go. Now, so I've got two potential accounts coming off the bottom. Again, it's a bunch of really cruddy overlap, right? So I'm looking at this potentially as an ending diagonal here, right? Now, what I like about this is we got the breakout and it came back and retested that general resistance area for heading up, right? In terms of this area here, it's possible that we've got, this looks like a spring, a low volume spring here, right? So you've got the range, so you get your preliminary support, right? Rise back up, comes down, selling climax, right? Volume and everything here. Automatic reaction, secondary test, pops up, right? Comes down, secondary test in phase B, pushes up, finishes down here with a spring. And, if this ends up being accumulation in here, right? Then what you're going to expect to see is a nice big candle and large volume on the breakout through this kind of area right here. That'll be your jump across the creek. And so that's what we'd expect to see, okay? Now we've got, as far as targets go, let's just look at counts here. If this is 1 and then this is 2 here as a WXY, right? Then we've got wave 3 minimum expected target at 22,560. We've got a secondary target up here at 22,955, okay? That gets us above the daily pivot and the 4-hour pivot. But just in case, maybe this is just wave 3 here as the red count says, and this is wave 4 in progress, right? So wave 4 has an initial target here of 21,935, secondary target up there just prior to the daily pivot at 22,180. All right? So basically what you're looking for is if we break out higher here, you're looking at 21,935, 22,180, 22,560, and 22,955. Those would be the targets I'm looking at, okay? Now, if we get up into these areas and we get rejected prior to this pivot and we come on back down, dropping below this, what is this, wave 2 or wave B here, right? Right there at 20,889 and 69 cents. That's going to say, okay, this is probably a wave 4. We're probably headed down in wave 5. Now, don't forget, wave 5, all it has to do is go 5 waves down below wave 3, right? So if it gets up here, we go 1, 2, 3, 4, 5, and it dips just below, then it dips just below, right? That's all that's needed. But if we do get the rejection, at these areas, we're probably looking at an initial target of 20,088 and then secondary target of this daily S1 pivot, 1 hour S1 pivot kind of area down here at around 19,800, right? That's what I said earlier. So don't worry about counts. Don't worry about anything else. Those are the targets that we're looking at based on the counts and everything else, okay? But yeah, if we do break out impulsively above this daily pivot and 1 hour, 4 hour pivot area, this confluence area here, 22,250 to 22,500. If we break out impulsively above that, most likely overall, we're going to see price rallying from the lows down here up to the, at least this R1 pivot area on the 1 hour. Potentially this wave B resistance around 24,450 kind of area. Because generally what will happen is they'll get us 5 waves up. If you're breaking out impulsively from above the S1 through the pivot, impulsively through the pivot, usually you print 5 waves up to the R1 pivot area. That gives you a wave 1 up. Wave 2 pulls back to the pivot. And then wave 3 breaks out higher. So that's what we'll keep watching for. Right now, it's just a bunch of sideways. And we'll see how this goes, okay? Let me see here. Poison's still waiting to long it at the daily S1 pivot. Oh, you're waiting for it to get down there and then long it? Yeah, definitely a possibility. Definitely a possibility. But if you see it breaking out, above this daily pivot and 4 hour pivot, impulsively, yeah, I wouldn't even, at that point, you're not getting that. Most likely. Most likely. Like I said, I think most people at this point, they're still looking for this to bounce toward this daily pivot. And that's kind of what I told Discord. I said, generally, I'm expecting a rally up toward that daily pivot at least. And if we get that rejection there, then that says, hey, wave 4, we've got wave 5 still to go. But if we do get that impulsive breakout above that daily pivot area, then usually that's going to imply that we're heading up, that we're, the bottom's in and we're heading up higher at that point. So, again, we've got a lot of room there on the daily to do that, right? So, yeah. Poison says 19,800 is also the 70.5 big Fibbo retracement from the low of 17.8 to the top. Okay. Let me see here. Hank says a possible swing failure pattern too. Let me see here. He says possible bull div on the daily for Euro USD. So fingers crossed that gets confirmed the next few days. I'm reading all your comments backwards here. If the Euro breaks parity again to the upside, and this time it has some legs, markets will follow. Euro sentiment is determining risk appetite at the moment. Yeah, exactly. The dollar did its thing for a year. I mean, as I keep telling you guys, things can't continue going on in the same direction forever, right? I say a year, it's actually been over a year and a half, right? Since January of 2021. Beginning of that. So, yeah, good possibility it could be topped out. And so with the euro, we're looking at a potential 5th wave done and complete, right? With the DXY, we'll look here in a minute, we're looking at potentially a truncated 5th. And it actually does. There's certain things we look for in truncations. It's not just, it's shorter than it, so it's a truncated wave. There's a certain way in which it shows itself. You're looking at 5 waves up that stop, pretty close to the wave 3 high. And that's what we've got. Again, we'll show you that. And so potentially, again, if the DXY is coming down, guys, that means money's coming out of the dollar, which means it's going somewhere else. And, most often what that means is it's going into risk assets, right? So you're looking at legacy markets, stocks and whatever. You're looking at, and in our case, crypto and whatnot as well, right? So you got everybody very, very bearish in crypto, talking about 10,000 plus and lower and all that. After we had the market capitulation, and then following that, we had the breakdown with 3 Hours Capital and all that stuff, right? Getting out all that over leverage nonsense, right? And so we've had that. We've had this huge pull off a 70,000 swing high, right? And people are still going, oh my God, no, we got to go below 10. We got to go lower. Again, I can't tell you it's not going to do that, but realistically, this is the same thing I talked to you guys about when we were at 3,000. Same thing I talked to you about in December of 2018, low there. Same thing I talked to you about when everybody thought it had to go higher when we had our June 2019 target. Same thing I told you about there when we had the drop, that whole March 2020 drop thing. Same thing I told you about again at Laser Eyes when everybody thought it had to keep going up. It's the same sentiment over and over and over again, this excessive exuberance or fear, right? And so I'm looking at it again saying, well, it looks a lot like it right now. So we'll see if we can get some continuation upward. But, it doesn't mean that I'm like long, irresponsibly, and just whatever goes, right? It means that I'm trading this move up, looking for those confirmations as we continue to go higher. And that's what we're doing. So, we'll see what we're looking at there, right? Let me see here. Let me find here. Where's that DXY chart? So the DXY, here we go. Look at this, guys. Look at this. We got up to 109.27. The swing high was 109.294. 0.024 points below the high there, right? So again, potentially could be this could be 3, this could be 4, and this could be 5. And again, this would be that non-confirmation because the Euro USD made a lower low. And the DXY so far has not made a higher high so far. So what are we looking for? Same things that I've been looking for. Looking for a breakdown below 108.042. If we can get that, that's going to hint that wave 2, or wave 5 may be complete. Either way there, right? Then we're looking for a breakdown below the 1 and 4 hour pivot here at about 107.289. And then we're looking for a breakdown below, the daily pivot. I mean, that's really kind of where we're looking. 4 hour, we're still pretty high up here on RSI. Stoke RSI is about to hit oversold though. And right now it looks like we're down in 3 waves. So could be corrective before heading up higher. We could get a breakout higher. We'll see, right? That dollar is up here though. And, if we do get a breakout higher, I think we'll probably end up with a lower high here on the RSI. So bearish kind of divergence, kind of like what we had here. I think we might get that here. So we'll see. Right now, that's an ugly daily candle. We'll see. Does the daily close below? If the daily closes below this one right here at 108, let me see here, 108.955. So if we close below that, that's going to give us a nice big bearish engulfing candle, which is going to be signals a pause, potential reversal. Here it was right here and then followed down lower, right? So that's what we want to see. We want to see like a bearish engulfing like this and then another big candle coming after it. And that would suggest, okay, this is probably the top heading down lower there, right? So again, a lot of things going on here saying maybe that top may be in. So we'll see. We'll see. And if it does, again, the big thing about that is if it is, then, it takes any kind of economic pressure that you're thinking about in terms of Bitcoin off of that, right? Off of Bitcoin. So you'll have, and that would kind of align with everybody being so bearish at these lows, right? Everybody being so incredibly bearish, with the big numbers down for Bitcoin. Makes sense that it happens at the bottom, right? This is what we talk about, right? Let's see here. What's up, Brian? Good to see you. Let me see here. Well, yeah, you say who will pump now, Hank? It's what everybody says at the bottoms, right? Remember, if you think about it, Hank, it's exactly what everybody said. Oh, let me find my my big chart here. Where is my chart? Is it this one? Yeah, nope. Let me see. Well, yeah, it's that one. I've got a whole bunch of extra stuff on here. Let's look at this one right here. It was the same thing. Everybody said it here. Who's going to pump? Everybody said it here. Who's going to pump? Everybody said it here. Who's going to pump, right? Everybody always says that at the bottom. It's always the same types of people. It's always the same professionals out there. Maybe not the exact same ones, right? Because hey, they got washed out here, a lot of it, right? But you've got those same types of people who are going to buy it. They're the same ones that are going to buy it. And then what happens is, again, guys, remember, in this accumulation area, what's going on is retail runs out of, supply to sell, to do any meaningful selling, right? Pretty much, when you get to those lows, anybody that really wanted to get out is out. Anybody left that wants to get out is not meaningful in any way, right? And so, but you do have the big money down here, which buys just enough to kind of sop it up so they're still trying to get those low prices. And eventually that selling tapers off and it just kind of inches up until you get the breakouts above the resistances, and then they jump in, the retail jumps in at those, at those resistance areas, right? So again, same potential thing that's happening right here, right? Now, let me see here. Baltazar says also potential bearish divergence on the 1 day on the DXY. Not yet. It's a lower high on the DXY still. So it's a lower high there with the RSI, and then it's a lower high with price. That's what I was just showing. It's 0.024 below the previous swing high. So yeah, but so this chart, I find this chart intriguing here, right? Because I wanted to look, because when I was looking, I was like, man, so we've got this dip down into oversold here, right? And coming out of that, we've got this rally up to overbought on Stochk RSI, right? And I'm like, man, okay, so I want to look at that. I want to see what's going on. So I'm looking back through Bitcoin's history, right? Only 2 times prior has Bitcoin dropped into oversold on the weekly. That was the 2014-15 bear market low there. It was the 2018 bear market low. There's the only 2 times prior to this that it's dropped below. Both of those times, it dips slightly below, a little bit more here and slightly below here. But, right below that, this is the 200 MA. Okay, so we're getting these things, right? We got the dip into it, right? We get the drop into oversold, right? And then on the breakout of that, we get this overbought condition here on Stochk RSI, right? But guess what happens every single time, guys? Every single time. So the twice it's happened before, right? The entirety of its history, the 2 times it's happened before, 100% success rate here. That has marked, that dip down into oversold has marked the bear market low, right? And then accumulation and then go. And then accumulation and then go, right? So the question is, and then accumulation and then go? That's what we're looking at now. Are we going to get that? There is no guarantee, guys. This is just something that I happen to notice on the chart. You got the exact same setup. RSI, Stochk RSI, basically the 200 MA area. It's all lining up exactly the same in those areas. So the question is, do we get that now? That's what we're kind of looking. So my other chart here just got a whole bunch of things. Looking at halvings, looking at time of movement between the previous halving and the next halving, between the previous halving and the swing or the bear market low, from the bear market low to the next halving, and all this, and just kind of showing it across here. And, you can kind of see, with each of these things kind of showing up. So what we have here is from the bear market, or from the bull market high to the bear market low, 406 days, 357 days, potentially 210 days, right? Now, so shrinking up each time, right? Which is generally, kind of what you would expect, right? If you've got a lot of momentum going into something, you get less time with those pullbacks, and then, before it rallies up higher, right? They're usually done quicker, right? Because you have more people looking at it going, oh my God, I can get in and make money now and go with it, right? And everybody thinking, oh, I want to make money with it. So those bear market length of time tend to take less time in there, right? Now, this one happens to go from the all-time high up here. If you go back over here, actually, that'll give you a little bit more time on here. That'll give you about 420 days, a little bit more there, if you do from that. But if you go, I'm going from the all-time highs to the bear market low. All-time high to bear market low, all-time high to the bear market low. So going on that, that's what we kind of get. Again, every time previously, we've had this same bit of things happening on our RSI and Stochk RSI in the same way there, right? So we'll see. We'll see. What's going on, HJ? Good to see you. So anyway, something I'm definitely watching here, as we kind of continue to go through this, right? So, let me see here. And the other time we got close to it was this swing low here. It didn't quite, it just missed dipping into overbought, or I'm saying oversold there. But again, same idea. It gets right there and then rallies back up and does that, right? So a little low there and then rallies back up. So we'll see. We'll see what we get here, right? So let me see here. So if we look at this, it suggests, hey, maybe there's something going on here. The problem is there's such a small data set, right? It's 2 times in the last 12 years other than this current time it's below, right? It's only the 3rd time in 12 years that it's actually broken down into oversold. The RSI has, right? On the weekly. So we'll see. That's the problem with it. I'm not going to lie to you. I'm not going to blow smoke up your rear end. It's only 2 data points. But historically, that's the bear market lows. That's what's happened, right? That's what's got it in. The other times here, similar to what we had right here with March 2020, we had this low over here in 2011, in November 2011, and it got almost to oversold. And then again, rallied back up with the strong move in the Stochastic RSI here, as it kind of did it sideways, and then broke out ahead higher. And by the way, these rallies up higher there are, significant moves up after we've been high, right? Over here, this breakout above this resistance lasted it stayed overbought. Stochastic RSI stayed overbought the entire rally up. So basically from 4,000 to 13.5 or so, 13.8. So, again, I tell you that so that way you don't sit here and go, oh, it's overbought, so, it's coming back down. No, not necessarily. The entire bull run right here for whatever this was here, March of 19 through June of 19, stayed overbought the entire time. So, again, could potentially be seeing that coming up. We'll see. With the dollar, if the dollar's topped out or pretty nearly so, makes a lot of sense, right? This one, like I said, this one ran up from 4,000 to 13,000 there in 3 months. We've got 3 months basically through the end of the year almost, right? 4 months. So do we continue to chop through September, part of September maybe? And then December, October, November, December kind of rally on strong and up and through. Maybe make it from 21 to the all-time high during that time, maybe. Gives us a wave 1 up and a pullback for wave 2, and then wave 3, big rally up, potentially, okay? So these are kind of what I'm watching as price action continues to develop. But this is, again, guys, this is that big picture potential, we'll see what happens kind of thing versus our local chart here, which, things have to happen on the local time frame, right? But if anything, that should at least give you something to go, okay, well, maybe I'm not just going to be permanently bearish. Maybe I'm going to be a little bit more cautious. And I can still think it's going to go down, but I'm paying much more attention now and being much more realistic about the possibility that maybe it goes up. Maybe. Right? Armands, what's up, man? Yeah, man, remind me before the end of the show there, okay? For about the Hex one. I'll check it out. So, any thoughts on the volume falling since 2015? Lewis Winthorpe there wants to know. Yeah, man, there's arguments there. Again, the idea that, that it was fake volume reported back here. That there was all this fake volume, and then the real volume started being reported here. So washing going on. People not really selling. They're kind of buying and selling to themselves, and it makes it look like there's a lot of volume. Potentially. So because this is the BLX, right? So this is that volume across everything, right? Not really too worried about it overall. Volume, guys, the biggest thing about volume is just worry about it locally, right? Look for changes in volume locally. Don't worry about big volume over 15 years or 10 years or something. That's not as big a sign. What you're interested in is where price is at that moment. How is volume and price action in relation to other volume and price action in that area? You're not worried about 5, 10, 20 years ago, anything like that. It just tends to keep you a lot more, because again, if you look at this, you go, oh, well, look, that volume's dropping off, so we're definitely topped. Not necessarily. As I explained, if we do potentially have, one more move up, say with Bitcoin and with the legacy markets, right? It's the idea that, it's this fifth of a fifth of a fifth of a fifth. It's a super cycle degree, right? So it's going to be a lot of exuberance coming in there, and you can see a volume spike, in the bigger time frames as price rallies up and makes a new all-time high, right? And so again, that could still potentially happen. We'll look here. Matter of fact, let me go ahead and look here right now. Let me pull up let me see here, a Nasdaq chart here real quick, guys, okay? So Nasdaq's the one that's rallied up 20 somewhat percent, off the lows, which 20% rally, bull market, right? Generally, the way we kind of look at it, right? 20% decline is a bear market. So here's what we have. Now, we've rallied 50% off the lows, right? And then we got, again, this kind of rejection here, and we've fallen off in what looks to be three waves, right? 1, 2, 3. The question is, what happens right here now? It tried to get up there this morning. It's kind of pulling back now. If this is 1, 2, 3, and then we break out above that swing high right there, right around the 13,053 area, then that'll leave that as three waves, which means it's corrective, which means we break up higher. If we break up higher, this looks more like a 1, 2, 3, 4, 5. Or, I mean, I guess we could probably go 1, 2, and then 1, 2, 3, 4, 5 gives us ABC, right? But that C is extending so far. Usually with corrections, most of the time, right? Not every time, but most of the time, wave C will extend 100 to 123.6% of wave A, right? We're well above 1618, right? We're well above 161.8%. See this right here? And so usually when you're at the 1618 or higher, usually it denotes a third wave. So normally we would have expected price to rally to this point right here. Notice that is wave 4. That's our usual target, right? But we've kept up. This wave up here is over twice the length of wave A. So it should have you cautious about potentially being a third wave and then heading up higher, right? So if this was a third wave, fourth wave is a 38.2 target right here, right around the wave 4 area. 50% down here to around the daily pivot, right? That would be, those are your two normal fourth wave areas that you look to target, right? And so if you get the 38.2, you'd be looking wave 5 up here around 13,795, which gets you around the 61.8, right? If you happen to drop all the way down to the 50, that gives you a wave 5 target up here at around 13,986, which takes you to the 65, right? Takes you right prior to this gap. Now, here's my other thought. Usually, when you make big reversals that are going to last a while, you don't leave gaps, right? And so this is April 5th. This is April 6th gap right here. So that, this is something I pointed out when we're down here, looking at least getting up through here to fill that in. Because if we're talking about, the super cycle wave top, it's going to go down for a while. And it's going to go down pretty far. We shouldn't really leave a gap there. Again, can't guarantee anything, but it really shouldn't. There's even a small gap right here, right? The January 5th here, right at around, you feel that gap in there at 15,622.72. So I am cautious about this idea that maybe this is wave 5 going up, maybe. And that would align then with what we're looking at with Bitcoin, which would also align with potentially the dollar being topped out or very nearly so, right? So we'll continue to look at that. You can see right here on the daily, we've already just about bottomed out and oversold on Stochk RSI, right? And so that should give us some kind of bump. That should give us some kind of push, right? A little bit here even. The question is, do we break out and head higher, or is that the top there? And that's what we're still kind of looking for. That's what we want to see in terms of what's going on there, right? Let me see here. If we look at, let's see here. So again, Nasdaq very tech heavy, right? If we look here at the E-minis, which is the S&P, right? Just the futures contracts there, which if you're not trading them, what's wrong with you? You should be trading them. Most liquid futures market in the world, right? Again, same idea, except we've rallied up to the 61.8, right? Same idea. Looks like three waves down. Again, extended third if it is, but still potentially third. The same. We're looking for those same drop through the levels that I've already been talking about, right? Nothing's changed on that. But again, is this 1, 2, and then 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, right? Is this 1, 2, 3? I mean, you just saw we can count that there, right? 1, 2, and then 1, 2, 3, 4, 5, right? Gives us 1, 2, 3, 4, 5, maybe. So, on this right here, again, your 38.2 is kind of this 40, 80 and a half kind of area. 50% is that daily pivot area. So if you can get a rally off that breaks back out, I mean, all of a sudden this looks like 5 up. And the thing is, if this is 5 up, guess what that means, guys? That means 3 back and 5 more up at least. The thing is, if this is going to break out, let's say this was 3, let's say this is 1, 2, 3, this is 4, right? A short 4. Well, you're looking for wave 5 to at least get up here around 44.64 right there, which puts it right around this high volume node, just above the 70.5. That's big for a wave 1, right? So you go wave 1, you'd pull back for wave 2. Wave 2 is usually going to target the wave 4 area, right? And then you got to break out higher, but you're limited now. You've only got 29.5% of a rally left before you're breaking out above the all-time high. So your ABCs, A usually ends in that 38.2, maybe 50, usually closer to 38.2, right? You get your 38.2 for A, your pullback to 23.6 for your B, and then you get your 61.8 for your C. And that at that point, wave C will equal wave A, right? But you're talking here going all the way up potentially to 70.5 or maybe even 78.6 as 5 waves. That makes it much, much more likely that we're going to break out to a new high, that this is just going to be wave 1. We'll have a wave 2, and we'll have a wave 3 on the breakout. Okay? So watching it still. Same thing here with the Dow, right? So, again, Nasdaq, very tech heavy. S&P, pretty tech heavy. Not quite as much as the Nasdaq, but pretty tech heavy still. And then you have your Dow, which is, as I continue to tell you guys, much more broad-based, right? Has a lot of different sectors in it, right? That didn't work. Let me try and pull this up again. That's what I'm trying to get there. All right. Once again, looks like ABC. Looks like, 3 or 1, again, could be 1, 2, 3, right? It's filled in this gap here. Is that all we're looking to do? We've rallied up 65% on this one, right? Just over that. So again, the idea that maybe this is a 1, 2, 3, 4, guess what? Usually we look at 38.6, so it's right there around 32.633, or the 50% at 32.139.5, which sits right above the daily pivot. So again, pulling back there, if we get the 38.2, that would give us a wave 5 up there at 35.378, which puts you around the 78.6. You go down to the 50%, it puts you even higher, puts you up there closer to 85.4. That's 5 waves up. If that is 5 waves up, you're looking at 3 waves back and then 5 waves more. Again, makes a big argument that we might be going to a new high, right? A new all-time high. And so if you're concerned about Bitcoin and you're very bearish, and you're seeing that the dollar may be topped out or nearly so, especially in terms of what the euro's doing, right? And you look at Legacy and you go, well, man, it's already rallied pretty deep. So if we get another breakout, that gives us 5 waves deep into wave 1, which should have you leaning toward the idea that a new all-time high is coming. Well, then why are you still going to be bearish on Bitcoin? Doesn't make a lot of sense, right? But it's the same people who are sitting here saying correlation, 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 who will then ignore the correlation and go, oh, no, but it's still going to go down further, right? Because people are emotional, right? Human beings are emotional. We don't like to think logically. Logically means we may be wrong. We don't like to be wrong, right? Detrimental for a trader, guys, okay? Let me see here. Yeah, Hank, I get it that you think it's already a 5. I get it. I know, I've seen your chart. We'll see. Like I said, we'll see how this goes. We'll see what the pullback is. Nonetheless, if you're breaking out higher, though, the idea that you've got a wave A to 65, 70%, the same thing I'm saying. If that's a wave 1 or a wave A, unless you're getting a very deep wave B, which takes you way down here, the odds are, again, more skewed to the idea we're heading up to a new all-time high. It's not an ABC. Because you've delved so deeply into the previous wave with just your first wave, with just your wave A. And most of the time, diving that deep in says that you're going to continue up, that it's a 1 or whatever rather than an A. So these are things we watch, right? We try and say, okay, well, we take it step by step. We go, here, well, here's the big picture. Here's what could happen, right? What are we looking at the big picture? How far has it moved? What does this usually mean? And then we look, okay, so now we're going to look at, do we get another breakout higher? So we're going to look at. So yeah. So we'll see. We'll see what happens here, right? Andrew believes that 12 to 14 is what most people are saying for BTC. I hear a lot of 10 and lower. I hear a lot of 10 and lower. But even 12 to 14. Guys, remember, let me pull it back out here to this. Let me just do this. Here's the thing, guys. Look at how far we are off for the top there, right? So we're already off 70, almost 75%, right? Off the high. And this is after we spent, what was this, a year going sideways here? From this point, I think it was about a year, right? Yeah, almost a year going sideways here. Even if you just look over here to the breakdown here, right? This whole way from this point, January 21 until about April of 22. I mean, that's a year plus going sideways here, right? And we're down 75% off that. And we've had 2 capitulations coming out of this, right? These volumes right here, these are capitulations. This, as I said, I believe was the market capitulation here. And then we had this over-leveraged 3 Arrows Capital, Celsius, Voyager, BlockFi kind of drop thing here with that even larger capitulation there, right? And then again, I said we get to the same point here where we are with RSI and Stochk RSI, where we've been on the only 2 other times it's ever dipped into oversold here in the history. Now, that doesn't mean it has to continue up. Again, this could be the wave 5 from the beginning, which means you're going to see that go lower, right? But if that's the case, it's going to go lower than 12,000. If this is the top, if this is 5 waves up off the beginning, it's going to go lower than 10, right? But if it's not, then what's going on here is the same thing we've seen at the previous 2 big bear market lows, right? And so now we want to see, do we get that same follow through higher? Looking for a breakout above this kind of 25.5 area here. And then, of course, that 33 area is your next one. And then you're looking up here at about 48 and some change, maybe 48 to 53, this kind of $5,000 range right here. And then, of course, you're looking at your all-time high up there. Those are your big weekly levels. That's what you're looking at as price, breaks through one and hits to the next. That's kind of what you're looking at for breaking out higher to bring up the next target up on those larger time frames. The thing is, guys, you'll have some retail jump in right here. Very little, though. You'll have some more, a little bit more jump in here. But the bulk of retail is not going to get in until they're up here. Until they're up here in this last $5,000. And really on the breakout is what they're looking for. They're going to miss this entire run because they're going to be scared. Because they're going to think it has to go lower. It has to continue to go lower. But you think so after you've had these huge capitulations already. Does that really make that much sense? It really doesn't. But, again, I can't guarantee that it's not going to. But when we look at the way things usually happen, it doesn't make a whole lot of sense, right? So I tend to err toward the side that makes more sense, the side where things usually happen. And then I just, risk accordingly, right? That's what you should be doing. Let's see here. Let me see here. You're watching the 50 and the 200 MA on the weekly. Are they going to meet up? Will they cross? Never happened on Bitcoin Weekly. Let me see. Do I have those on this one maybe? I've got the 200. You said the 200 and then the 50. I can use this one right here. I can just change this one from 21. You can see that 200 is about to cross that 21 there, right? But here's the 50. Yeah, I mean, it came pretty close right here, but that was after the bottom was already in, coming back, right? So you had this big move up, this biggish move down, right? Stayed away pretty well here. Kind of came a little bit closer here as it rallied up. Still pretty far away right here. Looking a lot kind of like this area, right? Looking a lot like this area here, right? With this. So yeah, I mean, let me see here. We've got that there. We've got this one breaking out here. I was trying to see at what point is the 20 at when price breaks out above that, the swing high resistance area there, right? So where we are there. But yeah, I mean, again, guys, just thinking of it logically, looking at what's already happened with your market participants. I mean, again, 2 big capitulations already, right? I don't have hash ribbons on. Let me throw hash ribbons on here. We'll see where we're at with that. I've talked to that with you guys there before. Oh, we got a green ball on hash ribbons on the weekly. Doesn't mean it can't go lower. We had a green ball right around here and it dipped just lower and then back up. So again, as I said, this could be 3 or 4 and get just a dip lower for a 5. So then you've got your accumulation range right here. Get a spring. We could see that here. Get a spring. And, everybody's so ready for 14, 12, 10, lower, whatever, that they're ready to buy that breakdown, right? Or they've already sold up here and they're waiting for much further down. So you get the dip below and the rally back up. And then they're like, oh, well, it's going to continue lower. And they never actually lock in that profit and continue going up. And then next thing you know, they're underwater. And if they're lucky, they go ahead and exit it. But most of the time it's emotional and they'll continue to hold, praying to God, that, hey, God, please just let it go down. And I promise I'll never do this type of thing again, right? I'll always take profit again. And then it doesn't, and it goes up and liquidates them, right? But, again, as this dips down, more and more people get into shorting, right? So then as it rallies back up, you have a lot more shorts to cover when you break out, as you rally up the breakout, which gives you those big candles to head up, right? So yeah, definitely something to look at, in that area. Yeah. Oh, let me see here. So just kind of looking at it, with what we're seeing on it, with everything, we can go to the 3 week here, or the 3 day here. I'm sorry. And so getting, currently getting a bit of a lower low or a lower peak here, right? Which usually indicates, a buy scenario. You want to buy, right? Historically, this is the 20 and the what was it, 20, the 20 and the, I'm sorry, the 50 and the 200 here. And what do we see? We see that that they cross bearishly, right? And then they start going sideways. Will they start going sideways here and signal that, maybe this is the bottom here? And then you look for the breakout above the 50 on the 3 day, right? The breakout above the 50, or the, oh my gosh, yeah. So it looks like the breakout above the 50 here, it kind of went sideways for a bit. So it was over, back and over. This one was a breakout above it. This one was a breakout above it. But that one actually didn't cross over the 200. So, again, guys, you can look for patterns across various time frames and with various indicators and whatnot to see, maybe something that might be interesting to you or not. Let me see here. Let's look at the hash ribbons here. Every time, let me see here. Every time we've got a blue buy after a green here, get the blue buy there, it looks like the bottom's been set. So low, then we get the blue, right? Get the blue again. And you get your green to your blue there. Again, consistently through here. Green coming up prior to that low there. But that blue is above that low, right? It looks like every time it does that, That blue signals that that the bottom's in for that area anyway. So like we had it here, and then it rallied up, and of course it ended up dropping back down there. But there we go there. Blue after. Interesting way of looking at this. Blue coming off it there. Yeah, so, you know, getting the green down there. You know, the blue kind of signals, okay, well, you know, the extended blue here seems to suggest that the bottom may be in. This one's a little bit different. No gray here like we had previously. Just green. So maybe something different happens here, but, you know, again, we can continue to look at that, right? Hunter, what's up, man? You like the large channel on the BLX weekly from the bottom of 2015 to the June low? Wouldn't like to see us go below that. Let's see here, from the 2015. Is that this one over here? January 2015. Let me do this. Kind of make this copy and take care of all this other stuff off here. So we got a clean chart. Weekly. Swing low here. So you're cutting this off, right? I don't know, man. If you're going to cut it off there, then you could expect a dip down here and back up too. Because you're doing it there, right? And if you're not doing it there, well, then you're not doing it from that low, right? So I don't know. I think maybe something like that. Which you don't have the back and forth between the top and the, you know, the support and resistance there. But I don't know. You know, again, you know, this makes an interesting argument here for EQ area. And, you know, you could see it going down potentially to 14,000 here. Still be at that area. But why would we just go off the bottom there? Why wouldn't we go off, say, this low over here? Because that doesn't fit narratives, right? When we think about it. Right? In this case, we've already broken off there, right? But, you know, again, you know, you had these sharper moves up, which have become more elongated. So, you know, again, you'd have this first one coming up, and then you'd have this one. So, you know, when you start throwing supports on there, right? You know, you've kind of got that. And then you've got this one right here, right? Do something like that. And then you've got kind of this thing right here. Again, you know, I think that you'd want to hold that low there. Now, if you do want to pull it from, I don't know, you know, you do want to pull it up not from the low, but from that, because maybe it's an extended, you know, that was your last point of support before rallying up. I don't know, you know, if you want to do that. You know, you could do this right here, right? There we go again. But you see how these start getting more and more flat, right? You go from here to here, right? All of a sudden your support's down here at 7,000. Get everybody's attention with that, right? So yeah. So I don't know. You know, again, if you do it from the bottom of 2015 here, right? If you do it from this one, then you're not doing it from the low, right? You're not doing it from the bear market low. If you do it from this one and you draw it to, you know, this current area, well, then you're skipping this part, which dips down below it, right? So if you're allowing this to dip down below it, then you should allow for this to potentially dip down below it as well, which means what? It means, well, maybe it's not so terrible if it did dip down below, right? Because it happened here, right? So again, I mean, think about this. If we're doing this right here, right? Here's what I'm saying. So you've got this, and see, and you're just you know, you're going to this. You're trying to you're pick and choosing, right? People are picking and choosing when they draw these, right? Why would you do this? This is the bear market low over here. Why would you do this one, right? But even if you do, again, this is the accumulation range. It dips down and breaks back out, right? So same idea here. Accumulation range, it could dip down, break right back up. So yeah, kind of looking at that, right? Let me see here. Look at Hex and USDC. Let me see here. I'm just doing this chart. Does this look bottomy? I mean, yeah, potentially. I mean, if you look at capitulation here, on the hash ribbons, I mean, on the weekly, it's a blue buy. And that's so far in the limited history it's had, that usually dictates that we're heading up higher. I think it'd probably be a 1-2, 1-2, which, then again goes in with what we're looking at with Bitcoin, right? 1-2, 1-2. Maybe not. It might be a 3. That would be a diagonal, though. But it doesn't quite hit the 1-6-1-8. So, I mean, you can go 1-2, 1-2, or you can do 1, 2, 3, 4, 5, right? Yeah, 5 might be looking right up here, at the previous area of support, right? Right up in there. Let me see here. Wave 3 is bigger than wave 1. Yeah, so, if you're looking at a, expanding, broadening wedge, right? And so, usually that wave 5 will be larger than that wave 3, right? So we would expect wave 5 then to get above that 0.076335.7 kind of area. We'd look for it to potentially target this upper range here, maybe break out, right? Peak out, do a throw over, and then come back. But yeah, I mean, it looks like it could potentially be, sure. Let me zoom in a little bit. I mean, I'm a fan of the price action and volume here. Excuse me. And you've got this range here. You've got volume dropping out through it, and then you've got it picking it up as it rallies back up. And let me see here. Oh, doggone it. Try and grab this right here. So, I mean, coming down here, this, gosh dang it, sorry about that. This looks like a preliminary support here, right? And then it drops on down here to this selling climax. You get an automatic reaction or automatic rally, secondary test. You got to peak out, you pull back, secondary test in phase B, rally up here. This may be your, your spring or terminal shakeout here. But, one day down, next day right back up into it, right? So you'd be looking for a pullback here on lesser volume than this right here. You want to see a pullback that gives you a lower or a higher low on lesser volume. The lower that volume, the better, the more significant that is, the more bullish it is. And then what you'll look for is your jump across the creek. You'll look for your nice big candle because you've got all your, your supply sitting here, right? So in this area here, you would expect to see a nice big candle and big volume coming out of it. Whoops. Yeah, I can't do it. Big volume coming out of it. Oh, wavy there, going back in time. But nonetheless, yeah, that's what you'd kind of expect coming through here. And that would denote that your accumulation is over and you're heading up. And so often what you'll get, is you'll get that breakout, You get the pullback, the back up the edge of the creek, and then you'll get the breakout higher, right? Which, may align with this 200 MA here on the weekly. So you can get a nice big candle in the breakout here that hits that 200 MA. And in this case, that would probably be 1, 2, 3, 4, 5, right? So that would give us a leading diagonal here. And we'll pull back for wave 2, right? So that would be 1. We'll pull back for wave 2 as you're back up the edge of the creek. And then your show of strength on the breakout there would be 3 heading up, right? So I could definitely see that potentially happening. Keynes, what's up? Could this potential triangle wave 4, could this be a potential triangle for wave 4? Man, oh man, I'll tell you what, that's something we've talked about before. Man, it would be a heck of a wave 4, right? So are you talking about like an expanding, broadening way, or a megaphone pattern? So you go A, B, C, D, and then you have to get a little bit lower for E. You got to get wider, so it makes like a megaphone pattern. That would be similar to what we saw. Dow Jones right here, A, B, C, D, E. Move up. So yeah, I mean, yeah, it's possible. It's extremely rare though, so I don't ever hang it out as my first thought. It's usually like a backup idea if things continue to play out in that direction, If it continues lower here and then higher here and then we get this drop, then we'll look at it. But, I would not sit here and say right now that that's definitely what it is. No. Because it's so rare to play out like that. You mean the short term? Oh, are you talking about locally right here? Right here? You can go A, B, C. Yeah, potentially. If you break out above this swing high up here, at 21,463 and 15 cents here on Coinbase. If you break out above that, then it's definitely not. I don't know, man. For me, even seeing this at a 4 is a little bit difficult because this looks so much more like 5 waves up. And it would have to be an ABC or a WXY. So maybe it's a WXY. But, it looks so clean as 5 waves, right? So, yeah. Yeah. I mean, you could, just in general structure here. But if you break out above that swing high, though, it's definitely not. So, yeah. You could. I mean, just as long as it continues making, as long as it continues contracting. Let me see here. Yeah. But if we are breaking out about this swing high here at 21,679 and 52 cents, I think we lean toward, if it's a wave 4 that, those wave 4 targets, I think we'll lean toward a breakout here. But once it does break out above that level, if it does, then yeah, it's definitely not. If it was to be a triangle, again, I think we'd have A, B. This would be C. So we'd still have 3 down, as D, and then 3 more up as E before we broke down. And so, that could give us just a dip below. Swing low here, Again, we're looking kind of at this range like this here, but if we do get that breakdown lower, we could be, there might be an argument to be made for something like this, right? So selling climax, automatic rally, secondary test, pop out of there, right? Secondary test, phase B maybe, but we're up kind of high on that. But, you get like a spring that dips down below, potentially. Back up higher there. So, yeah, I mean, it's the possibility there. But with all this overlap and all these weird counts, again, what I tend to do in those situations is I give it a count that I say, okay, maybe it's this, or again, this alternate count. And then I just watch the validation, invalidation levels, the support and resistance levels that moves in there. I give it time to work itself out. Give me something better to work with than this nonsense right here. Yeah. I think I was even looking at potentially like a 1, 2, 3, 4, 5 gives us 1, and then A, and then B, right? And then 1, 2, 3, 4, 5 as an ending diagonal here is a flat, right? And so this would be 1, 2 as a flat, and then 3 up. See, so there's lots of different ways, multiple different ways of counting it, just because it's a lot of overlap. So yeah. So I like to look at, I like to watch the pivots, depending on what time frame I'm trading. I like to watch, the price action swing highs and swing lows. I like to watch the HVN, stuff like that. Watch that volume and price action as it's playing out there. Kind of get an idea of what it may potentially be or what may be going on, and then work with that. Here on the 1 hour, we're just here between the pivot and the S1 pivot, or even between the daily pivot and the 1 hour S1 pivot, 4 hour S1 pivot. So we're kind of in no man's land. So if you were really hell bent on trading this, you're going to want to get down to like a 15-minute where you've got some pivots in there, and other stuff, some other structural stuff you can work with. Otherwise, if you're looking back out here, it just doesn't make a whole lot of sense to trade much of anything on this right here. We are right here. We're just hovering right here between that. That's why I say, if we get an impulsive breakout above that pivot, well, coming in sideways between the pivot and the S1, impulsive breakout above the pivot usually indicates we're going to the R1. And that'll usually give us 5 waves up to that area. And then so that gives us a 1 and then a 2 back to the pivot, which usually is the 38.2 to 50% area retracement. And then we head up higher, just based on structure within the pivots, right? So, but we just pulled back to a significant area of support here, right? Support resistance all the way back here through 13th of June. We're going to support resistance probably even further back than that. Again, all the way over here. It's about it where it's at. This is up ahead a little bit. So, I mean, even if it's going to go up, guys, a lot of work to do. But, the possibility's there. There's nothing strongly saying it has to, right? So we keep our eyes, open. We kind of pay attention to what's going on there for possibilities. And then, the shorter time frame we work the shorter time frames on outward to the larger time frames as those validation or invalidation levels are taken in or taken out, working with it. There's nothing real significant either direction going on. This is just sideways chop. So more likely than not, you're going to lose money trying to trade it. Look for your opportunities on smaller time frames. But if you're going to trade the 15-minute, guys, you're not looking into the 15-minute chart to make $2,000, a $2,000 move. You're looking at maybe a $400 move, maybe, with where Bitcoin is right now, right? So, I mean, right here, I'm looking going, okay, do we have 3 down and break out above that second wave? That might say, hey, maybe we're going up higher, right? And so you look at the, kind of this this area right here, right, which is basically your resistance up here. So, I mean, it's not a huge move, right? It's right here. Maybe $225. Or it breaks out and hits this level right here, even the EQs, right? So, I mean, it's not like there's any real huge movement that you're looking, but you're only on the 15-minute, right? Again, getting up to this target's $560. Now, if it does continue up higher, okay, great, but the problem I see a lot of traders get into is they look at this on the 15-minute and they go, man, I'm going to enter here for some target way the heck up here. There's too much that can happen in the meantime along the way. Doesn't make a whole lot of sense. And then so they end up holding when the price goes against them, and losing out on money, losing out on profits, okay? Anyway, guys, listen, it's getting late here. I know I started late, and it is late, so I need to get out of here. Man, oh man, but hopefully you guys will be, some of y'all will be over there. Oh, in Vegas there, the 10th through the 13th. Like I said, if you are, I'll let you know when I know more details. But I'll be teaching a little bit over there, and then maybe put together some meetup or two or whatever while we're there. See what we can see what we can find out, see what we can do. And hopefully get to meet some of you guys. If not, if you're in Discord with me, of course, I'll still be working and getting stuff done with that as well. I'll just be doing it from Vegas. So, yeah, we got that. As always, remember, guys, the only thing you control in the market is how much you lose. So please keep working on that risk management, okay? It's the most important thing you'll do day in and day out as a trader. It's the thing that's going to keep you in there, keep you sane when you're screwing up. And you're going to screw up. You're human. We can't possibly know the outcome to every outcome, right? That whole decision tree, I keep talking about it. We can't possibly know it all. And on top of that, we tend to be emotional at times. So you're going to make bad decisions, guys. Make sure your risk management is top-notch so you can save yourself from yourself. All right? All right, guys. Man, oh, man, have a great day. And, man, I'll see you guys over in Discord if you're there. Otherwise, I'll be back here on Friday, 11 a.m. Central Standard Time, and hopefully the software will be running well then. Y'all take care, okay?